Temasek actually has a very wide mandate in India and of course across the world. We invest both in listed equities as well as in private equities. We don't have an allocation across either. Our investments are typically very bottom-up, led by where we think there's a lucrative commercial interest to be investing for us.
So you make the allocation to India per se, and then decide whether it's listed or
no, not really. Not even to India.
Okay.
Our investment approach is, significantly bottoms up. So when there's a interesting opportunity in India, we would take it to the IC, and then they decide whether it makes sense for us to do it or not. Like I said, we have a flexible mandate. We invest both in public markets as well as in private markets. We can take small minority positions, and we can take significant stakes as well, on occasion control. So it's a pretty flexible mandate. What is consistent, however, in each one of these investments is that we tend to be long-term investors, whether we are invested in public or private markets.
And that's a function of the fact that you're a sovereign wealth fund, or do you think within, even compared to other sovereign wealth funds, that's a unique approach?
Actually, we are not a sovereign wealth fund.
Okay, so let me stand corrected on that one.
Yeah, so we are frequently mistaken to be one. We are an investment company which is 100% owned by the government of Singapore. But we do not call ourselves a sovereign wealth fund, nor do we behave like one. We are in fact a company which invests entirely out of its own balance sheet. So unlike funds, there isn't a fund life that we are catering to. And that enables us to take longer term bets. Because essentially we are not looking for our investments to strictly fit in the parameters of a fund life, which can then put constraints on the kind of investing that you do.
So what kind of opportunities get your attention when you say bottom up, right? So what kind of opportunity gets your attention, one that should come and pitch to you? Like, is it sectors or IRR hurdles, or what would you say is?
But obviously, any investment needs to meet an IRR hurdle for us. But beyond that, we have a pretty diversified portfolio, not only globally but even in India. So we would have invested significantly in financial services, in industrials, consumer, TMT, fintech, and the list goes on. In each one of these opportunities, we would have made the investment because we thought that there was a strong investment case and a robust company, which we were backing.
Okay. How has your decision making changed over the past few years? I mean, we've obviously had an interesting government and lots of reforms going through. Has that made you more positive on India? Or were these things going to happen anyway?
Firstly, we've been in India for the last 14 odd years. We've been constructive on India for some time. Having said that, some of the recent initiatives of the government are very helpful. We think the initiative that the government's taken on IBC, the GST, are all structural reforms which would be beneficial to the India story going forward for many years to come. Yes, I'd say what the government has done over the last few years has further enthused us. But it's, we have been in India, and we have been fairly active investors and fairly significant investors in India for several years.
What challenges do you still see, whether it's macro or micro?
India always, as in any other market, of course, continues to have areas that always need to be dealt with. One area that one must be cognizant of all the time is that India is a very popular market, and therefore there are a number of funds which are quite focused on the opportunities here. Therefore seeking out investments in which one is able to make the returns that one is seeking to make is hard work. Of course, that's also what makes India interesting. So I'd say that in itself is something that you have to continually watch out for.
So hang on, so you're saying India gets too much capital? Because most of the stories that we hear is that we are still short of capital. So what's going on? Like, how do you reconcile?
I don't know if I can say too much capital or too little capital, but India certainly in the private equity space is one in which we have seen a very large number of investors being interested in. And just earlier today there was a discussion that India has seen an order of magnitude about $26 billion come into the private equity space. That's a lot of money.
But we need trillions.
Yes, absolutely. That may be so.
So the question then is there a capability gap? We need the capital. What we're getting is nowhere near enough. But maybe the managers or the individual opportunities are not there to take the money. Is that kind of what's happening? Because even in listed space, when you ask them, would you consider India, and then say, yeah, but the liquidity beyond the top 50 stocks is like next to nothing, maybe 100. So we need capital, but yet we can't take it. Is that what you see in the unlisted space as well?
I think it's fair to say that in the unlisted space, for any company which has a robust business, which is run by capable management, there are lots of takers for. There's at least in our experience, are a number of private equity players interested in many good deals, which has an impact, of course, on on the valuations as a corollary impact. Whether the amount of capital which is coming to India is sufficient for the overall economy or not is not for me to answer. That's someone else to answer that question. But I see that there is a fairly material amount of competition for good deals.
Okay, so how are you handling it? What do you focus on that makes you get the deals?
Basic stuff. You have to identify the companies early. You have to get to understand sectors much in advance. You have to try and prognosticate how companies and sectors will evolve in the future, and you have to concentrate your focus on some sectors and companies at a point in time. So simple stuff, but if hopefully if you're there early enough, then you're able to make good investments.
So if there are entrepreneurs and fund managers watching this video, what would you say, who all should be approaching you and who shouldn't waste your time?
Well, if you've got an interesting business.
What's an interesting business? Is there like a market address, what do you call it, addressable market size or something like that? What any other criteria that you say?
I don't think there's a metric to,
But don't you get inundated with so many emails then?
Yes, we do.
Yeah.
But just like I was saying, our business is one in which hopefully we've thought through the opportunity set that various industries are going to throw up. Hopefully we have also given some thought about which companies in various sectors, even if we don't always know their names, which types of companies in various sectors would be the ones that will succeed. And therefore, typically, if someone writes into us, we're able to respond pretty quickly because we would be in a position to say whether it's something of interest to them or not, to us or not.
I'm writing in.
Yeah.